Hi Ron, it's Stu here again. Welcome to Thursday, the 10th of the 4th, 25. The markets, eh? The markets, absolutely crazy. What to do? We had a massive rally yesterday. I'm sure you're all aware. One of the biggest moves ever on the Nasdaq and the S&P 500. The S&P 500 was sort of initiated as an index. Hasn't really changed much since 1950, just after the Second World War. And I think it was the first, second, or third biggest one-day move yesterday. I'll double check. I was just looking at some headlines, but I think it's about the third biggest one-day move yesterday. Incredible stuff. Madness. Obviously, the news is we were on air last night as well, breaking that Trump will delay tariffs for 90 days. 75, was it 75 again? Don't quote me on these exact numbers. About 75 countries, or it might be 57 countries. I can't remember. I can't remember which way around it was, but yeah, a lot of countries apparently are in discussions with his team about what we can do about these tariff logos. Remember, this is only on goods. This is goods. I mean, the most significant parts of the trade balance between these developed economies, these free, open, developed economies, is the services sector. The services sector accounts for 85, 88%, 90% in some cases of a country's GDP. So it's just stuff that he's focusing down on. And obviously, there's a lot of stuff that the Chinese produce that the Americans want and have taken in. And it's upset that massive trade in deficit that the US has with China in particular, and other countries as well, obviously. So that's what he's drilling down on. So it's a lot of energy for a lot of hassle, a lot of volatility, a lot of upset, and the rules have been broken and thrown out the window with President Trump. So I said normally today, the data would be driving things, the CPI data, the inflation data, but it's really all about what's coming out of Washington. So currently it's relatively quiet down in Washington, but the markets continue to move around. Just a quick recap what's happened. Last night we had the PPI, the producer price index from Japan, hotter than expected last night. Later on, we had the CPI data, the consumer price index data out of China, cooler than expected. And the PPI was also cooler than expected, 2.5% from a negative. So we've got this disinflation in China. We got spikier producer price numbers in Japan. And we'll see what the main, the main player, our friends across the water in the US, come out with later. 3% is expected for the core number, and on an annualized basis, and a tick up by 2.3 of 1% for the March data that is due in 12 minutes. It says there on the screen. Let me just make myself a little bit smaller. Make the screen a wee bit bigger. There we are. Hopefully you can see that a bit better. That's our calendar. That will update eventually. I'll have to refresh it all and scroll through it as usual. It's Thursday, so it's claims day. Remember, we had this strong number last week. We came down under the 220,000 number. So the weekly claims continue to show very strong resilience within the US jobs market. Even the some cracks. Earlier, we had that big spike in non-farm payrolls on Friday. It was only on Friday. It seems like a long time ago, doesn't it? All sorts are going on after Liberation Day and Reciprocity Day yesterday. Record day on the markets. Absolutely madness. We talked all about that last night. The credit market, the yield market, continues to dominate the headlines, and that's really what the market is currently focusing on. That 10-year yields we talked about yesterday touched 4.5% at one point yesterday, but we did have the strong uptake. I don't know if it's actually on here. Was it on here? The 10-year treasuries, which again we talked about last night, but sure. Yeah, this note auction came in here at 4.435%. So having to go much higher than expected, but still showing that there's interest in obviously US Treasury. So that was a strong number from there. The obviously the minutes. Not irrelevant, but they're just, the worry about inflation was reflected in the minutes, expected higher inflation and lower growth. So the R word obviously is not mentioned in the FOMC minutes recession, but the market makers, market participants, analysts are all talking around that recession in the US, and it rippling out, impacting the global economy, obviously, and questions remain. Will China respond yet again to this another crank up yesterday to the 125% tariff on their goods? And then obviously the rest of the world's worrying about, well, where are all these goods going to go? They might, end up dumping like we had previously, had steel dumping in Europe in particular, overproduction of steel in China was dumped in Europe a few years ago. So we'll see obviously how it all pans out. The UK, there was an analyst on I was watching this morning, saying for the UK's point of view, it may come out of this quite well. Obviously it may or may not. It's still a 10% tariff on it's nearest and dearest, apparently. Special relationship. But I say, as we will see, things will all come out in a wash, no doubt. As far as the markets are concerned, ahead of CPI, gold has rallied this morning. This is the 4-hour chart. We just go back to the high time frame daily chart. After there we are. There we are. Let's get rid of that. There we are. It's a bit good. Can you see that? Okay. Let me see what you're seeing. Yeah, there we are. So a bounce yesterday. Now we're up again today. So the brief breach of $3,000 was literally that. Back over the 20-day moving average, 50-day proving nice support zone. But obviously the 3,000 is the big support area. And are we going to have another pitch for a new all-time high this week? We'll see. Obviously we went to 31.67 last on the 3rd of April. Let's see where we go. We're still pushing higher, 31.25 currently today for gold to the upside, ahead of the CPI data. I'll do this back upside down. So indexes, stock markets. What a turnaround. S&P 500, massive rally yesterday. I can't remember. I haven't got it written down here next to me, but I put it up on our Discord group, didn't I? Let's share that with you. Our Discord group, it was up here last night, wasn't it? There we are. Green across the board. That's the nice photo there from, this is from FinViz. It's nice to visualize it. Oh, actually, that's before the markets closed yesterday. So let me just get rid of that. And it was here. That was the NASDAQ there. NASDAQ, massive 12% rally, record day move. So we jumped up on that, obviously the 90-day pause, and then just rallied into close as well. So big rally. Is this, going to continue? Well, we'll see as the day grows over. But some of the big gainers yesterday: Apple 15%, Nvidia 18+%, Walmart 9.5%, Microsoft 10%. I won't look obviously, but Tesla 22.69% in one day, massive. Facebook, Meta Group 14%. So again, the big tech stocks led everything. Broadcom 18.66%, AMD 23.8%. So the Nasdaq was the biggest beneficiary, up 12% on the day yesterday. As I said, the broader markets were all very strong. So we were up 9% when I posted this. We closed 12%. The Dow was up 6%, closed 7%. S&P was up 8% as well. A massive day yesterday for the stock markets. This morning, though, or overnight, we've cooled. So big rally, big engulfing candle, right as it, into the 20-day moving average, and then we're down. So we're down quite relatively significantly as well at the moment here on the S&P 500. The Nasdaq's a similar pattern, massive rallies we've just seen. There was that low 16,340. I don't want to keep talking before the data's out, but 16,340, the tariff low. Massive rally yesterday, but it's just the volatility. So is this going to we're still, tariffs are still in place. We couldn't break that 50% fib level of the decline from all-time high. So we went into bear market zone here. 20% decline from a high is regarded as a bear market. It was only briefly, but we're still in, and we're still 50%. We're still under 50% of clawing back the big leg decline, but we're still in sort of contraction zone, but not in actual bear market zone. At the moment, we were at a 10% decline from all-time highs for the Nasdaq 100, the narrow measure of the tech stocks, and that would remain. That will still technically remain short, although I've got no open positions on the indexes at the moment. They're chopping around so much. And the Dow, the broader Dow, the narrower Dow, the industrial similar market into the mover here. This was from that last leg, so we went to the extended. Anyway, as you can see, the pattern's the same as you might expect on a daily basis. So quite a relatively strong move to the downside currently today. And the other key thing that's happening, it's kicked off yesterday, is the earnings season. Everybody seems to have forgotten about that. Excuse me. First quarter earnings numbers start coming out. Tomorrow's the big day when Citi and JP Morgan report their, I think I'm saying Citibank report, but certainly JP Morgan, the biggest of the Wall Street banks, report earnings. So they could be all over the place. As this tariff fiasco, I'll call it fiasco, perhaps I shouldn't have done. This tariff issues, the chopping around, the volatility, the whiplash, the whipsaw, call it what you will, but we are still down, aren't we? That's the ultimate measure. We are under a 20-day moving average. We're way under the 50-day moving average. We are negative, and we're still weighing on that. You can't have the world's two biggest economies going logger head to head in never going to come. Somebody said yesterday, US will never win the tech war if they're in a trade war with the rest of the world, and particularly with their, the biggest manufacturer of them all, China. But yeah, we'll see how it all pans out. But it was a massive turnaround yesterday. 90-day stall. Remember when he first announced the tariffs on Mexico and China, Mexico and Canada, it was just simply a 30-day stall. This is a 3-month delay, so it takes us from April to May, June, July, so right in the middle of the doldrums of the summer. But it gives a lot of time for countries and teams to negotiate. And yeah, anyway, let's see see what the impact is. Obviously, at the first quarter earnings, how they've will have taken in these Trump initiatives, these Trump policy announcements, but the impact and has only felt in half of the quarter, because it was around about Valentine's Day, wasn't it, when they were announced and started to implement. They would be implemented, would they go through? And they obviously didn't go through until we got into April. Which is obviously in the second quarter rather than the first quarter numbers, but it'll still be seen, particularly with the banks that announce first, the retailers as well. Some of them have been hit really bad. Nike, Levi, in particular, the two that come to mind. See what those numbers look like when they actually hit the screens starting tomorrow, with JP Morgan. So we'll see what that looks like. Anyway, indices. Big old rally across the board yesterday, down against it. Across currently in the live markets, the cash markets that are open, similar patterns here. This is the FTSE, big up day yesterday as we went under this 76, 70, 75 area again, but then rallied into back over 8,000, where were we? Yeah, 8,150 yesterday, but down against it. And the more volatile DAX currently trading at 20,600. Having rallied to 21,500 yesterday, which is a key sort of a support area as we're coming down. Again, the low took us to 18,800 here, on Monday's very volatile session as well. So volatility remains the key component. The indices remain under their key 20-day moving average. So I'm not looking to buy this until there's some settling down, and maybe some settling down now, because 90 days is a long pause. The issue remains tariffs are still on the board against all their trading partners from the United States. 10% is the baseline, and the CPI is out. So let's just have a quick recap of this is Forex Factory data is out, so it's weakened actually, which is would be good news for the White House. This might be front running the impacts from the tariffs, obviously, because it's ahead of them. But a big step down. This is what this is sort of feeds into what the Fed has been saying about the transitory nature potentially of the impact of the tariffs. But ahead of the tariffs, they're coming much weaker than expected. So 0.1 of 1% for the core for the month for March. The annualized headline is coming negative 0.1%, and the year on year now is a big old decline to 2.4% from 2.8%. Unemployment claims also remain very much hot. 223,000. That's a strong number. But stocks remain still, I say, down on the day, 1.9%. Nice. That's positive. We'll see the reaction on the. Let's just go to the currencies. So that's a positive number. I'll just refresh our calendar. We'll have a look at the more detail on our calendar. As it doesn't update, does it? Now we'll look through them on the investment.com calendar. So let me update that. So data is in. Let's have a look. Sorry, let's go back to the not the indexes, but the euro. So 111, a big old update again for euro. Here in the 5-minute chart, we've breached and held the break of 111 on that. So dollars weakened on the CPI data. So CPI has come in. Let's bring it again here. It's coming negative Thursday. There we are. There's all those red numbers and the strong jobs numbers. So core PCI, the one everybody is really addicted to, 0.1 of 1% from 0.2 last time. So it's much weaker than expected, and this is a big drawdown. The headline 2.8% from 3.1%. The core year on year 2.4% from 2.8%. Big step down. But this is, as you say, this is front running the impact of the tariffs. So this is good news for the White House. It's a good, well, depends what side of the trade you're on, but it's where the dollar will weaken on that, as we can see here, 111.25. Sterling's got even higher. We're at 129.50 zone to the upside. We were short this, weren't we? We've had quite a hit. I'll show you the updates of the trades we had open. We've had 4 losers, I think, today. Aussie 62, back over 62. CAD 140.56. A big move down. I think we were short this, weren't we? Target. There we are. T1's been hit. I can't remember if we got stopped. Was that still open? I can't remember. Well, anyway, if certainly half the position would have been closed out on that 40 foot. Yes, it was the only one that was still open. It was still in the money, so we've it's hit profit, but it's come back straight away, which is quite interesting. But anyway, that's certainly we got a final winning trade of the 4 we had that were open. If I just go back to the ones, because I've tried to avoid. This is. So that's in that we've had a winner, but we've had 3 relatively big losers as well. Can you see that on the screen, guys? Let me just, no, you can't see that because let me move that. Get rid of that. If I hide that, you can see that now. Hopefully, yeah. There's our 3 losers overnight. It's 300 pips, more than 300 pips there, but we're actually down for the week quite significantly at the moment. yeah, we were down 20, so it's through. We're negative 300 pips for the week at the moment on those. But the CAD, so this CAD has hit its first target, so there's a little bit of a bounce back on that. But yes, that's quite significant. Quite a significant call on that US CPI data. And you can see there. So there we are. Yeah, that's yeah. Let's go back to the calendar again. So this may be the outlier. We may see the problem. This also makes this weakening of the inflation. That back to that heading to that 2% target of the Fed means that the impact of the tariffs could be even more exaggerated when they come through. But it also means that they're going from a lower base. So you can read that both ways for the how they want to spin it politically. But certainly economically and data-wise, that's quite a significant weakening of the inflation story in the US, which is positive news. But also, and again, a stronger number for the unemployment situation as well, claims situation. So the continuing claims, those people that have been claiming for more than 4 weeks, that's come down as well. It's weaker than expected. And last month ago, yeah. So last week's been being pulled down under the key psychological 1.9 million. So we're at 1.893, and we're weaker than the expected number. So 1.85. So and the more the more significant, or the the initial claims, the weekly claims, 223,000. So again, it's sticking at that 223,000. We got the Forex factory calendar. You can see that a wee bit on the calendar, on the chart here. You can see it's it's a very it's a very a strong jobs market still. The claims still down around this 220,000 level. Good numbers. So with inflation coming, that's it's leading into the impact of the tariffs. It might be less significant. So we'll see obviously next week where we go for that. So let's have a quick look at the markets again. So first bit of good news we've had today. We've had a trade winning. Dollar CAD hits our target at 140.42 from last night. The others have all been stopped or got stopped out earlier this morning. Crypto, I know a lot of you trade crypto. We're back under 82,000, but we've had a strong sorry, it's a 5 minute. We've had a strong couple of days for Bitcoin as well. Obviously, a big, massive bounce yesterday from testing this 75,000 level, which we tested on Monday. Big rally again, but into its 20-day moving average. Couldn't break it, couldn't hold it, couldn't break 83,000, and we're down again at under 82,000 so far today. So again, the trend remains to the downside, but we've got obviously the big channel we've broken out of was that 92,000 level, and then we went to test this 76,000, but we've then gone a tad lower this week in the volatility to 75,000. So we continue to plot lower lows, and the highs continue to sink higher. So the decline or the trend is far from over yet, but yesterday was a big positive day. But you can have very, 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 as I'm sure you all know, very, very volatile days in the Bitcoin market, when the wider crypto market in particular, but Bitcoin is it's not immune to that as well. But as you can see, the 20-day is playing as a strong resistance area. So to take this higher, bulls, Bitcoin bulls, we'd like to see, or I would certainly like to see, a day like this, big positive break from a large stride up. But that was the last big day of this rally we'd had from the last test of the 76 low, and then we've been down again, and the red candles, the bigger bodied candles, are bigger than the green up candles, aren't they? Except, and that was then turned on its head yesterday. But again, is this just a volatile outlier? So we need to see a nice solid break of the 20-day moving average, and this moving average start turning up, and this one start turning up. At the moment, they're still both sloping down, so it's bias to the downside, and you can't rule out another test of this 76 zone. Technically, the RSI is supporting that because it can't break over the 50, this mid-level, and the MACD signal lines also. The histograms are red and under the 0 line, and the K and the D line are negative and just moving down as well. So technically, that's all still quite bearish, or negative, not bearish, but sort of overstatement, for Bitcoin on this end of day basis. So you take your money, you pay as your choice, my friends. Oil's been very very volatile. We went all the way down to 55, as we said yesterday. 55.12. We had a big old rally on the relief of the 90-day tariff relaxation. But again, like the stock market, we were down another 1.5% again today. So we couldn't hold the 62 zone, and we're back to 60, 50. And again, just like we've just seen on the, it's going to be more of an exaggerated fall, isn't it? With Saudi Arabia planning to pump more. Drill, baby is one of Trump's mantras. This is what he wants to see, a low oil price, but this has gone down here because of the worry about inflation and the worry about global growth. So we've got a weaker dollar today, we've got a weaker oil market, and we've got weaker stock market. So 1 and a bit % fall for the oil market continues. So don't rule out this next low down here at the $58 level for oil. So that continues to weaken. That trend is still, very much a trend to the downside. On the energies market, the metals market, let's just go a bit broader than we normally just focus on gold, but copper and silver, two big industrial metals. China is a big consumer of both of those. Copper, which is a funny one to trade, but huge decline from highs. And again, if we just put a little fib level on this, you can see, way below our 50 and 20-day moving average, but right into the big round number of 4. Oh, actually, technically, fib didn't get there, but the 4 zone was tested yesterday before we rallied really strongly. But as you can see from the decline from 533 all the way down to 4, it's a massive move down, and the 50-day sits right on the the 50-day move. Sorry, let me just plug that in. The 50. Oh, what are you doing? It's technically, let's do it. We're going to do it. Let's do it. There we are, at the bottom of the day. The 50-day sits right on this big resistance there at 4.70. Is a huge resistance to the upside because we've got the 20-day and the 50-day coalescing at that level, and it's also the 50 Fibonacci level. Above that is the key golden ratio, which sits at 4.8393. So I'd call it 4.84 for round numbers' sake, but that's looking quite negative now as well. And that's a big decliner. Copper, silver, similar pattern to gold. That's just for the sake of our Fibonacci webinar earlier in the week. Let's just do that. So we get 28.22. Except you see this is reacted differently. The low on the silver market was plumped here on the 7th, and it's recovered since. But again, it's capped. Currently it's capped at the 50 fib level. So profit taken there if you try to capture that very volatile bounce in the silver market at 31.40 or 31.38.9. You see that on that chart there. But again, we've had a cross here already of the 20-day crossing from above to below the 50-day moving average, and that's a negative situation with these two massive down days we had on the 3rd and the 4th of April, consecutive significant falls in the silver market. So that all commodities are under pressure, but there's some differentiation in the actual performance of the technical performance of the commodities. And finally, platinum. I know again it's a nice one to trade, but again we've had different new highs here. It was through here. So again, let's do this for the sake of completeness for the commodity complex. So under 900 on the on the 7th here on Monday. And we've rallied Monday, Tuesday, Wednesday, Thursday. But again, the 50 periods, it's all the way up there at 950, and the golden ratio there at 964 for platinum. And again, a big decline running into that low, that break of 900, which we hadn't done for a long time. Anyways, when we were last on the 900, back here in March. But see the round number being a key support, bounced here, but we were under there for a few weeks here at the beginning of the year, wasn't it? It was just beginning, yeah. And oh no, it wasn't. It was the end. Where was this? Beginning of February in the winter time down under 900. Was that? Hang on a minute. What am I talking about? That's 900. You feel? It's this 875 area. This was the beginning of the winter 875 zone. So we found support above that, interestingly, this week. But again, you know, these key fib levels will provide resistance to the upside for platinum market. But basically, what I'm trying to say here, the commodity market remains pressured with the tariff impact. So the tariffs are impacted absolutely everything. As I say, that move against the dollar on that weakening in the US CPI is probably extending, and presumably the indexes may have bounced a bit on that. Let's have a look. So we're down for the day here. We look at how the dollars, the indexes have reacted. Oh, actually, they went up initially in the counter and moved back down in the last 10 minutes. This is obviously on the 5-minute chart, so they've gone back to in line with trend following the CPI data. So Nasdaq 5-minute chart is lower again. The DAX is tracking lower as well. S&P 500 again, positive reaction to the weaker inflation, but that's been turned on its head within the last 10 minutes, and we're back down again as yields also become have weakened. 10-year is now, it's just come across my right screen here, 430.43, so it's lower than it was yesterday, but we've been to 433 this morning. Now we're at 430, so we're down on the day on the inflation data yield. We've got a 30-year yield, 30-year auction later on today. I don't know if it's actually on here. Should be. It's got the 4-week bills, but there you are, the 30-year bond auction. That's later on today. The other at the higher end of the yield curve, 30-year bond auction, 4.623 last time. See what that looks like later on tonight or this afternoon. Yeah, so that's positive. I mean, presumably the president has been tweeting about the positive CPI data, but stocks futures in the US still remain very negative. Nasdaq 100 is down 2.3% now, and the S&P 1.8%. Just something going across I've got the Bloomberg TV here. Something about he's tweeted about the budget bill. Oh, that was the. I won't go into the US politics, but basically they've the Republicans seem to have or tried to not. I was going to use the word frig, but they've set the system up so that the Democrats can't actually table a motion to talk against the budget until the fiscal year ends. The US fiscal year ends on the 30th of September. So the budget, this big budget bill, whether it's going to be one or two, going through the US Congress, the Democrats have been sort of a bit stymied from talking it down or stalling it from some amendments that the leader of the House has put in. So that's not going down great, but obviously that's pleased the president. So anyway, let's unless there's any questions, my friends, I'm going to wrap this up and go and get some lunch. Let me see if there's any chat. There's nobody here, I don't think. No. I'm going to go and get some lunch. So when you trade the S&P 500, let's just go back to the majors. The euro. Let's go do these again. So the euro continues to hold. Interesting. See how the indexes have rallied and then come back, whereas the euros continue to push higher. So we had initial weakness of the dollar. It came back a bit, but now we're bouncing back up. So the dollar continues to weaken on that inflation data. If you're trading this, it's been a strong positive start this morning for euro dollar. New daily highs from yesterday was breached 111.15. So we're trending higher again. This strategy would have gone long here at 9 o'clock. Our stop loss now would be round about there, 110.57, and we might be moving it up on the completion of this candle in 10 minutes, right about here. I would be happy to have my stop loss there on that one now. It may come back and tout this, but there we are. We're into these highs we got to here on the 3rd, and the next upside target for that would be 111.46. So if you're long euro dollar today on the 1 hour chart, your next upside target is 111.46. Just shy of the 111.50 level. So dollar weaker. Next big move could be the obviously that the 30-year auction later on. And any comments out of the administration and any other members of us. There we have Logan was speaking. I know there was some speeches. So Logan Bowman, I got a speech. It used to be quite a dove, Miss Bowman, but everybody's hawkish now, and Goolsby as well. So plenty of chatter from Fed members this afternoon, and Hawker is probably Hawker here will be the most significant of those speakers. If you had to rank them, I know it's probably a little unfair on Mr. Logan and Mr. Goolsby, but I'd rank Mr. Harker, perhaps the most significant of the speakers, to come this afternoon ahead of the auction at half an hour later. So obviously, the Fed's balance sheet as well. I forgot about that. So the actual numbers of the balance sheet, this massive debt, 6.723 billion. The balance sheet that the Fed's got, trying to run that down, and the $3.427 trillion debt. I mean, these are eye-watering numbers, and eventually somebody will have to do something about them. Obviously, governments run deficits all the time and constantly and for generations, but it can't go on forever, I suppose. Anyway, my friends, take care. I'll see you tomorrow, later than planned tomorrow. I was going to be live for this the PPI data. It's less market moving normally than the CPI data, but I'm going to shift it back to the 3 o'clock window. I'll tell you the exact time. This is 3 o'clock my time, isn't it? Yeah. So it's 2 o'clock. 1400 hours Universal Standard Time, the GMT time, because I feel that it's really the sentiment now is key, given the obviously the massive whipsawing and volatility we've seen from the renouncement of Trump. So how the consumer feels about inflation and generally their sentiment perhaps could be quite more significant than the PPI data later tomorrow. So it'll be a bit later tomorrow, and we'll do a wrap up of a very, very volatile week. As far as my trading system's concerned, I nearly didn't take another trade last night, given that my trading system, end of day trading system, is very much about trend analysis and trends, and the volatility has been chopping all over the place. But I got suckered into it, or pulled into it, because the system doesn't really know what's going on. It just reacts to the data and the numbers. It doesn't take into account much of the sentiment. Anyway, it's because I think it was because I hadn't actually posted much for a while. So anyway, there were 300 pips out of the bag. We're still up for the month, I'm sure, but we'll do all that, crunch the numbers tomorrow and over the weekend for the week. So currently, let's just say this currently. So currently, my standard end of day strategy has looks like short positions for the Nasdaq 100, or a long position. I'm not sure, but a long position for the Nasdaq 100, feeding on that massive move we had yesterday, even though we're down. and also there might be some other indices come into that play if they continue to perhaps bounce back from the move down I've had today. The Nikkei is also potentially looking to trigger long today. It might have, well, we'll see. I probably won't take that one as it stands. The other one is there's a bit more going on. We got euro, dollar, we got the DAX. So look, DAX, the Hong Kong, not true, that Kiwi, CAD's in focus again. So Kiwi's in focus. So, but yeah, still a long way to go before close. Dollar yen potentially, and but not the guppy. The guppies are competition entry, isn't it? Okay, I'll wrap that up. So just in summary, we've had a very positive, well, if you're tracking inflation, a very positive reading for US consumers and US businesses. Core inflation falling to 2.8% from 3.1%. The headline 2.4% from 2.8% also, but the core is more important, ahead of the impact from the tariffs. Are the tariffs going to be as bad as everybody's saying? Who knows? As ever, markets always tend to overreact, and we've shown a classic example of that this week. US initial claims continue to hold steady, very strong at around the 220,000 level. The 4-week number is now under that 1.9 million, quite significantly. And overall, that was a good set of numbers for the US economy, and it's weakened the dollar. Stocks rallied a bit, but they've gone back down. So it's really the sentiment still driving things. Without that, all the whipsawing and the volatility we've seen from the tariffs, that would have been a good day for stocks and the dollar today. But it's overshadowed by what's coming out of Washington. So take care, everyone. As ever, if you want to join us, please come and do so. We're here to help you. As I say, standard two-phase challenges is the most popular. But if you fancy a quicker reaction, the express challenge is only one stage. The standard two-phase is here. There's our targets, profit targets, reduced from 10% to 8%. These are changing all the time, guys. So not all the time, but from time to time. Give it a go. There's always coupons available. SC25 is still working, so you can get a 25% discount on this. So that would bring the $85 $10,000 account down to $63. The most popular hit is the 25,000. You saved yourself $43. I think that's I don't know if there's any bigger code. As I said yesterday, there was a 30% discount last week for Eid, but SC25 gets you a 25% discount off there. Get 15, it's 15%. Obviously, these are all used for the first. You can use them once on your first account, but I mean, even at full price. I mean, it's just even at full price. These are great ways of using small capital to be able to leverage and use the big accounts to be able to trade, things you might not trade, like the CAD yen and like the euro CAD. Admittedly, we lost today, but it's not just the big popular numbers. But anyway, do come and join us. We're here to help you, and we want you to be successful. Because if you're successful, we're successful. Take care, everyone. We'll see you tomorrow. A bit later than today, but big old volatile week coming to an